Welcome to Iraqi Dinar, your premier destination for accurate updates, comprehensive financial reporting, and expert insights on the evolving landscape of global currencies. As we enter May 2025, we find ourselves at the forefront of a historic financial shift, one that not only validates years of speculation and analysis, but redefines the trajectory of two emerging economic powerhouses. The long-anticipated revaluation of the Iraqi Dinar, IQD, and the Vietnamese Dong, VND, has now been officially confirmed. These landmark changes were announced in real-time broadcasts across major international television networks, offering a rare moment of immediate global validation. For many, it was the culmination of decades of economic evolution, investment anticipation, and political debate. For others, it marked the beginning of a new era in currency valuation and international finance. This isn't just a story for currency traders and policy analysts. It's a sweeping shift that touches on macroeconomic structures, national sovereignty, investment strategies, and geopolitical influence. For Iraq and Vietnam, it is a milestone born not of short-term market pressures, but of years, if not decades, of structured reform, fiscal discipline, and strategic development. These countries have not merely adjusted numbers on a screen, they've redefined how the world perceives their economic potential. Iraq's journey to this point has been long, complex, and fraught with adversity. From the devastation of war, foreign occupation, and international sanctions to the burdens of corruption and economic dependence, the dinar suffered greatly, both in perception and in real value. And yet Iraq's core fundamentals have remained strong throughout. With vast oil reserves, a demographically young and growing population, and a geographically strategic position as a regional energy hub, the potential has always been there. In the past decade, Iraq's central bank has worked diligently to stabilize inflation, reduce fiscal deficits, and decrease reliance on the U.S. dollar. Through digital finance adoption, tighter monetary policies, and the accumulation of foreign reserves, the groundwork for a sustainable revaluation was laid. Strategic partnerships with nations outside the Western economic sphere, particularly China, Russia, and members of the Gulf Cooperation Council, have further enhanced the country's financial autonomy. Today's revaluation of the dinar, approaching and in some markets surpassing $3 USD per IQD, is not an overnight anomaly. It is the result of consistent long-term national strategy. Similarly, the Vietnamese Dong's revaluation reflects the culmination of one of the most impressive economic transformations in Southeast Asia. Vietnam, once regarded as a low-income, centrally planned economy, has transitioned into a diversified, export-driven manufacturing giant. For years, the government maintained an artificially low exchange rate to enhance export competitiveness, a strategy reminiscent of China's earlier economic model. While this approach brought short-term advantages, it also undervalued Vietnam's growing economic capacity on the global stage. Over the past decade, Vietnam has demonstrated consistent GDP growth, cultivated a globally competitive industrial base, and diversified into high-tech agricultural and service sectors. Its robust trade agreements with the United States, European Union, and ASEAN have positioned it as a key global manufacturing and logistics partner. At the same time, its central bank has implemented forward-thinking reforms, balancing monetary easing with interest rate adjustments, and investing in modern digital infrastructure. The government has also made significant strides in improving fiscal transparency and corporate governance, thereby attracting both domestic and foreign investment. The new valuation of the dong now brings it more in line with regional peers, such as the Thai baht and Malaysian ringgit, finally acknowledging the strength and maturity of Vietnam's economic performance. The global financial response to these revaluations was swift and dramatic. Within moments of the public announcements, currency trading platforms were flooded with activity. Institutional desks adjusted positions in real time, triggering significant price shifts across Forex markets. Banks began updating systems to reflect the new rates, and financial advisors scrambled to provide guidance to clients holding these currencies. For many investors, especially long-term holders of IQD and VND, this marked the realization of a patient and often controversial financial strategy. What is emerging now is not just renewed interest in Iraq and Vietnam, but a broader reconsideration of how emerging market currencies are evaluated globally. Financial institutions with exposure to the Middle East and Southeast Asia reported immediate valuation gains. Asset managers and fund strategists began reallocating capital toward these revalued markets, signaling a shift in investment flows that may have lasting consequences. Brokerages and remittance services quickly updated their rate calculators and trading platforms, reflecting a new financial reality. For many economists, this moment could be the first in a series of similar revaluations among developing nations whose economic fundamentals far exceed their current currency valuations. Countries with improving trade balances, export-driven growth, and stable geopolitical environments may now evaluate whether their currencies are similarly undervalued and consider pursuing revaluation strategies of their own. And yet, amid the excitement, investors are urged to proceed with clarity and caution. With substantial currency gains come equally substantial responsibilities. Legal, financial, and regulatory implications must not be overlooked. Currency holders are advised to verify that their financial institutions, whether banks, credit unions, or Forex brokerages, have properly updated their systems to reflect the new rates. Temporary discrepancies between digital platforms, ATMs, and service desks are to be expected during the transition. Active communication with financial providers is essential to confirm rate accuracy and processing timelines. In parallel, proper documentation must be prepared and maintained. Currency holders should have original purchase receipts, valid identification, and a clear transaction history. This documentation will be critical for verifying currency authenticity, processing conversions, and addressing any future inquiries from tax authorities or regulatory agencies. Importantly, high-profile financial events such as this attract fraud and misinformation. Investors must remain vigilant, avoiding unverified dealers, unlicensed exchanges, and any claims of exclusive access or inflated rates. Only transact through institutions regulated by recognized financial authorities. While this revaluation creates new opportunities, it also reshapes fundamental aspects of global trade. Iraq and Vietnam will now possess increased purchasing power, enabling them to import higher-grade technology, invest more deeply in infrastructure, and engage in global trade negotiations on more equal footing. On the other side, countries that previously benefited from artificially suppressed exchange rates may now find their exports less competitive. This could lead to adjustments in global supply chains, pricing models, and inflation projections. Iraq, for instance, may renegotiate oil contracts previously burdened by currency risk premiums. Similarly, Vietnam's export sectors, from garments to electronics, will need to adapt to new pricing realities. These changes could ripple through Asian and Western economies alike, requiring multinationals, trade organizations, and investment groups to revisit long-term forecasts and pricing strategies. For commodity markets, where Iraq and Vietnam play pivotal roles, the revaluation may influence pricing benchmarks and market dynamics for months or even years to come. This transition, however, will not be without turbulence. Financial markets often overreact to sudden changes, and the scale of these revaluations introduces a risk of short-term volatility. Some traders may exploit price swings, leading to speculative activity that can destabilize markets. To counteract this, central banks must remain alert, implementing interventions as needed to manage liquidity, cool overheating sectors, and preserve market confidence. Investors should avoid impulsive decisions, relying instead on structured planning and informed consultation. Tax implications, capital gains, conversion regulations, and potential scams must all be carefully navigated. Professional guidance isn't just helpful, it's essential. As the dust settles, the significance of this moment becomes increasingly clear. The simultaneous revaluation of the Iraqi Dinar and Vietnamese Dong represents not merely a shift in exchange rates, but a deep restructuring of how the global financial system recognizes value. It acknowledges the economic efforts and strategic decisions made by two nations long underestimated by the broader market. For Iraq, this revaluation validates years of recovery and reform following decades of conflict, sanctions, and foreign dependence. It marks the beginning of a new narrative, one of independence, modernization, and economic legitimacy. For Vietnam, it affirms the success of a carefully calibrated transition from a planned economy to a globally integrated, investment-ready nation. The world is watching not only the updated numbers, but the stories behind them, stories of resilience, transformation, and vision. These currencies are no longer just speculative instruments. They are reflections of real economic strength and national progress. For those invested in IQD or VND, this could be a once-in-a-generation financial opportunity. But capitalizing on it requires more than optimism. It demands structure, security, and sound judgment. The markets have changed. Now is the time to transition from passive speculation to informed, strategic participation. And as global institutions, including the IMF and World Bank, monitor the next phases of this evolution, additional policy updates are expected. These may involve cross-border settlement changes, capital controls, tax reporting guidelines, and further recalibration of investment frameworks. Investors, institutions, and policymakers must stay informed and adaptable. This is not the final chapter. It is the beginning of a larger economic realignment, one that will shape how emerging markets engage with the global financial system for years to come. For real-time updates, expert commentary, and actionable financial insights, continue relying on Iraqi Dinar Info, your trusted source for credible, balanced, and timely information. Thank you for being part of this pivotal moment in financial history. Markets are adjusting, nations are rising, and the future is unfolding. As always, we're here to help you navigate every step of the way, clearly, securely, and with purpose. Stay informed, stay secure, and pursue your financial growth with clarity and confidence. The journey has just begun.